I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. With us a guy that I know it's time to have him on when people start asking me, hey, you ought to have this guy back on. You ought to have him back on. And who I'm talking about is Rob Kirby. Rob Kirby of Kirby Analytics. Rob Kirby, thanks for joining us today from Canada.
Pleasure to be with you, Greg.
I just want to give you a little bit more background so people understand. You know, you have a lot of experience in derivatives, back in the days when they started the whole derivative idea. You have more than a decade for that as a broker of derivatives. You also, have your macro analysis, your site, kirbyanalytics.com, and you also buy and acquire gold for people by the ton. So, you have big sources and inside sources and global sources. So I just want to kind of get that in there before we start. And I want to start with the Fed rate hike and the bad jobs number last week. And last week, I want to start with Jeffrey Lacker saying, and I want to just read this quote, there's a strong case for a rate hike. And I'm thinking, what planet are you on? Unless they intentionally want to crash the system. What do you make of Lacker, the Fed governor, Fed president, whatever he is, saying from the Fed, Jeffrey Lacker, saying that there's a strong case for a rate hike?
I think his comment is insane, and I think it's complete and utter misdirection, Greg. The jobs number was very weak, and there was some revision to previous months, but the headline jobs numbers was extremely weak, and we're looking at record of low participation rate in the employment realm in the United States, and I honestly don't know where this comment comes from. It's like we're living in Alice in Wonderland, Greg, with the comments that we're getting out of people from the U.S. administration on all fronts, I might add too. But to say that this bolsters the chances for a Fed rate hike in September, whether they do or not, the jobs number certainly is not fuel for a rate raise. If anything, Greg, it's exactly the opposite. It's very good reason to argue for additional QE or leaving rates at zero forever.
Didn't you predict to your subscribers that, earlier last week that, hey, folks, there's going to be probably a really bad number that'll pave the way for what you're talking about for a QE? Didn't you predict that to your own subscribers?
Yes, I did. On Thursday, actually, Greg. What I did say to my subscribers is that with China being confirmed as a very large seller of U.S. government securities, the notion that the 10-year bond hasn't budged is inconsistent with China selling a whole lot of securities unless the Fed is monetizing debt or basically doing a QE job in stealth without declaring it, and which I believe to be the case. And what I speculated to my subscribers on Thursday, I said I believe the Fed is doing a stealth QE right now, and I think that they're going to have to start paving the way to justify an official announcement of additional QE. And what better way to do that than to report a weak non-farm payroll number on Friday? And sure enough, on Friday we got a weak non-farm payroll number. So I believe that the Fed is greasing the skids or the path towards an official announcement of additional QE. That's where my head's at right now.
A lot of folks that I talk to have said all year long, actually going back to I don't know how long, they said they would never raise rates. I had one guest on that said they'd raise rates, they wouldn't raise rates till after it all crashed. But you've been saying they won't raise rates. They can't raise rates. I had Nomi Prinz on telling that she gave a speech to the Fed and the IMF saying, if you raise rates, you'll crash the market. So if they raise rates, they intentionally want to crash the market, and you say no way, they're not going to do that. They're going to do more QE, and more QE is coming.
Back in 2007 and 2008, Greg, when the whole world said rates were going to be forced higher because of the financial turmoil going on in the U.S., I told everybody, no, you're wrong, they're going to go down. I was laughed at.
You were right.
I've been laughed at consistently for my calls on interest rates, and my calls on interest rates have been absolutely dead nuts on.
I would say yes. And so you don't see any rise in interest rates coming down the pipe. I mean, I guess what you'll see is more QE and in the inflation. When is the inflation picture? I guess that's what's going to happen.
Greg? You know what? Here's something that I would say. I wouldn't be shocked if the Fed might raise short-term rates by 10 basis points or some absolutely ridiculously stupid amount like 10 basis points that would mean nothing. And if anything, that's a confirmation of what I'm saying and doesn't really signify any intentions to raise rates. A 10 basis point rate rise, I don't think there's ever been a 10 basis point rate rise in the Fed funds rate, period. But if they do that, it just shows that they're desperate and they've painted themselves into a corner, but there's more QE coming no matter what.
So they would try to have it both ways. They want to print tons of money, but they want to protect the dollar at the same time. Is that what you're saying?
What I'm saying is if they raised rates by like 10 basis points, it would be a really lousy bluff. It's like somebody holding a really crappy hand in poker and making a stupid bet to try and flush out or get someone to fold who's holding 4 aces, and that won't work. It's foolishness. But you know what? We're living in days of foolishness. Everything that the Fed's doing is ridiculous. And the U.S. administration trying to rig all markets all the time is completely and utter ridiculous. They've thrown all the laws of economics to the wind, and they think that they can rule the world by engineering outcomes that aren't consistent with economics or reality. But this is the crazy world we're living in right now, Greg. It's unbelievable.
I was somebody wrote on. I think it's a stockbroker, a stock guy, or whatever, and he wrote on about it. And I said, there's the Exchange Stabilization Fund. There's the Plunge Protection Team. There are, they ignore fraud in LIBOR. They ignore fraud in. They admit it, but they fine them. So they ignore fraud. They don't do anything about it. In LIBOR, rate rigging, in currency rigging, forex. They admitted to it. They convicted them on it. They admitted to it. That means they rigged the gold market. They ignore, the phony accounting rules given to us by FASB since 2009. They ignore all that. And he says, well, that's precisely the point why it'll all be propped up. And I said, this is a fraudulent economy, to your point, and frauds end quickly. Look at Bernie Madoff.
Yeah, well, but Greg, listen, when you talk about what they're ignoring, you see, the biggest problem they have is they have regulators that don't regulate.
Well, yeah.
That's like having a fire department that won't answer the fire bell when it goes. And if you don't answer the fire bell when you're a fireman, things burn to the ground. And that's exactly what's going to happen to America. It's going to burn to the ground because of the absolute criminal, sociopathic nature of the people that have taken charge of your country. And it's going to burn to the ground. And this is why the whole world's concerned. And this is why there are cracks in the foundation. This is why, for instance, the Bank of Japan just announced this week that they're going to set up a ruble currency swap arrangement between the yen and the ruble. If this isn't a slap in the face to America, you tell me what it is. This is one of America's staunchest allies. And they're setting up currency swaps with America's biggest stated enemy, Russia. Think about that one. Just think about it. Like I said, it's going to burn to the ground, Greg. And it's, and the fire's already been lit.
Where are the other cracks in the foundation? Where do you see this thing breaking up? I know we had a terrible August month. We've had these gyrations where, the market opens 1,000 points down. It wasn't a fat finger. Where do you see the other cracks in the foundation with the economy?
Let's just say in the economy, my God, we have the lowest participation rate in the labor force, I think, that's ever been recorded in America right now. We've got doctored numbers. We've got Fed officials making pronouncements that are like, that pigs are flying in the air. This Lacker, who should be renamed Laugher, because what he says is a joke. And it's in the la-la land. And international relations between America and the rest of the world, I would say, are probably as low as they can go, but they're going lower because this thing's burning. and burn at will, because out of control does not yield positive results.
You were one of the people in the camp that's a while back. That's I mean, you wouldn't say a date, but you weren't looking good for this fall. I've had several people say this fall wasn't looking very good. I think you were one of them. I mean, you didn't name a date, but you said things they're getting worse. And so, what do you see about what's going on here going into the fourth quarter? September, October. No, well, I think September is still the third quarter. You know, October, November, December. What do you see coming down the pipe in terms of the restriction of gold, in terms of its availability of silver? I mean, the prices are low, but yet demand is high. It just seems crazy to me.
Well, like I said earlier, Greg, the laws of economics have been thrown to the wind. Increased demand in economics is supposed to mean an increase in price, all things being equal. Well, in precious metal land, we have the exact opposite. And the reason why that is, Greg, is because a strong precious metals environment, or strong pricing in precious metals, is like a report card on the stewardship of the world's reserve currency. That's the monetary authorities in the United States. And they don't want their report card to be F's across the board. And if precious metals were allowed to do what they want to do, then the report card would be reading as F's right across the board, as in fail. But you know what? You know, Greg, the whole issue is when you go to school and you get F's across the board and you hide your report card from your parents, it doesn't mean that your parents aren't going to find out that you failed. And you see, the whole world is now grading America, and America's burning. And when you're burning, it's really hard to put out a message or convince people that all is well. And America's failing in spades at doing this, and rigging markets and acting in a sociopathic nature doesn't make this job easier and doesn't make it true just because they say so. And they have idiots like Laffer making pronouncements that a weak jobs number is good tonic and a good basis for raising rates. It clearly isn't.
You acquire gold by the ton. What are you seeing in the background in terms of the buying and selling of gold by strong, rich people or sovereign funds, whatever? I mean, you're dealing with governments at some point or very rich people. How hard is it to buy a ton, 2 tons, 5 tons? How hard is it to acquire gold and silver, for that matter?
Greg, on the retail level, it's becoming extremely difficult because the mints aren't able to produce enough product to satisfy investment demand. On the wholesale level, it depends where you are in the world. Some jurisdictions, it's dry as Gopher's Gulch, and in other areas of the world, there's relatively supply. For instance, on the wholesale level in North America, there is metal available. On the retail level, there's very little available. In the Asian countries, on the wholesale level, there's basically none to be had. And on the retail level, it's been bought up too. But you see, increasingly, people that I talk to who supply investment, like, for instance, coins coming from mints, they're all telling me that it's becoming harder and harder, and the wait times to get product are longer. You see, the way it works, Greg, when you want to buy coins, you got to pay for them today, and then if you're lucky, you get them in 3 or 4 weeks. And this is because they're all back ordered, because investment demand has been so strong. The wholesale market doesn't work that way. Nobody on the wholesale level is going to pay for 5 tons of metal and then be told, oh, it'll be there in 4 weeks. It's a cash and carry business, and it's either there or it isn't there. But in the coin market, it works a little bit differently. Coins and small bars, let's just say, it works a little bit different for retail, where you put your money down and then you have to wait and hope you get it. and that as the wait times get longer and longer and longer, it is a symptom of stress on the supply side of the market.
You were vexing, I think the last time we were on, and maybe the time before that, you said at one point they're just going to run out of metal. I mean, that day is coming. What do you think about that? I mean, how is that day getting closer? I mean, are they going to just run out of metal, at least in the, the wholesale side, a lot where you work, where it's, metal by the ton, or in the retail side where it's metal by the ounce in the bar, small bar? Are we approaching a time where, LBMA or COMEX is just going to say, yeah, we can't deliver?
I believe that's coming. But I'm wondering, Greg, if what might happen before that actually is announced or admitted is whether people will just simply say they're not going to take U.S. dollars for precious metal. Because I think the time is coming. I think the time is coming where certainly I believe crude oil is going to be taken off the block in terms of its trade for dollars, or there might be a period of time where other currencies are officially named as being settlement for crude oil. And I think this is going to be led, basically, I believe that it's going to be the Arab nations, possibly led by Saudi Arabia, who's going to turn their back on America and say, I do believe that Saudi Arabia eventually is going to say that they're going to take Chinese currency for their oil.
Well, this deal that Obama is pushing through the Senate actually, it's just bizarre. I mean, I've never seen this before, and I've been around for a long time following the news. Can I override a veto? I mean, Saudi Arabia, I've talked about with other guests. I said, what happens if they say, okay, we're going to start accepting payment for our oil in other currencies other than the dollar? Doesn't it all unwind, boom, at that announcement, at that minute?
Well, it could very well, Greg, and the reason is so many countries around the world hold U.S. dollars in their reserves precisely for the reason is that they're always convertible into oil. Or they always have been historically convertible into oil readily. And if Saudi Arabia starts saying that, taking that away, that surety in the dollar away by saying, well, you don't need to hold dollars anymore. Now, if you hold the Chinese currency, you can buy our oil. A lot of countries are going to, for their own self-preservation, are going to take a hard look at their reserve accounts and how many U.S. dollars they're holding.
Is that something that you have come up with on your analysis side of the brain here? Because I know you do macro analysis, you do big analysis, and you sell this to subscribers. It's a good service. Or is that something that you've heard with your global sources and contacts, and you don't have to name them? Or is it a combination of both?
Well, I'd say it's a combination of both, but more than anything, Greg, it's common sense. It's completely common sense that if you're holding hundreds of billions of U.S. dollars in your reserve account, why does anyone or any country want to hold a whole pile of fiat U.S. dollars in their reserve account if suddenly they are questionable as to what you can purchase with them? Like when currencies start to turn to tapioca, people get rid of it. And that's been a universal constant. Even if you've got people from the Federal Reserve making idiotic pronouncements to the contrary, when things have the appearance of being losing value, people tend to shed them. Same thing in bonds. When bonds are downgraded, people sell bonds. And when currencies are downgraded, and let's just say if Saudi Arabia were to say that they're taking Chinese currency in exchange for oil, that's a downgrade on the dollar, period. Okay? And nothing that Jeffrey Lacker says is going to change the fact that that's a downgrade to the dollar. And when you downgrade something, it's not as desirable to hold, period.
If you take a look at what Greenspan said a few weeks ago, and this just flew right under the radar. And he talked about a bond bubble and talked about bonds blowing. Of course, he helped cause this back in the mid 2000s in the late 1990s with his loose, the maestro Fed policies. But I guess maybe he's trying to redeem himself, looking for redemption. But I believe him. He thinks there's going to be a bond bubble. I know there's a big derivative component in the bonds. How bad? What's he seeing? Why is he saying this? What's he seeing? How bad could this get?
What's he seeing? He's the architect of it. What he's seeing is the fruits of his own labor, and he knows exactly. This is a man who declared or proclaimed that you could never see a bubble until long after it's been blown. Well, he blew a whole ton of bubbles when he was the chairman of the Federal Reserve, and the man is as far as I'm concerned, Alan Greenspan is a pathological liar. Ben Bernanke after him was another pathological liar, and the current Fed head. I don't know where she gets off. I don't know where people like Jeffrey Lacker get off, because you know what, the utter garbage that they're sputtering is ridiculous, and
But could we have a bond blow up though? I mean, I think he's telling the truth about that. I mean, he's had a series of lies, and all of a sudden he wants to tell the truth, and I think he is telling the truth, or is he not?
Well, he probably recognized that the Fed's engaged in undeclared QE as well, just like I came to that conclusion, and he probably knows that you can only do that for so long. There's a reason, Greg, why they say it's not nice to fool Mother Nature. Because when you fool Mother Nature, she has a tendency to bite you back, maybe in a place where it isn't very pleasant to get bitten. And you see, these guys are playing with fire. But you know what? They're desperate and they're cornered, and basically all they have left to do, or the only thing they have left in their bag are dirty tricks and lies, and they're playing them aggressively. And when you're lying and you're aggressively telling untruth to the rest of the world, the rest of the world doesn't remain idiotically stupid for very long, and it catches up with you. And that's when former friends start doing things like creating currency swap lines with your vaunted enemies, because they think they maybe want to have a foot in the other camp, because the old camp that they used to deal with isn't playing fair and isn't playing right and is doing despicable things. And this is exactly where we're at, burning.
Jim Sinclair, we talked about this in the pre-interview, and I just give your comments on what he said. He says, and I'm surprised he said this. What we saw, a week or so ago is a pre-crash, and he says we're not going to get out of September without the real one. I mean, what you're saying is that they're desperate and they're backed into a corner. Is a crash much closer, a financial calamity, and not even just a crash? Is a financial calamity getting much closer, or is it already here and it's unwinding in front of our eyes? I mean, what's going on?
I think it's unwinding in front of our eyes, and I think when it blooms in its full glory, Greg, it's not going to be called a crash. It's going to be called the Dark Ages. That's how bad I think what's coming is.
Well, I'll tell you what, my friend. People. I've asked this about other people, and maybe you can give me a good answer for it. When you say Dark Ages, what is it going to look like to the man on the street? I ask that all the time, and I don't really get a good answer, because a lot of people just say, what should I do? I don't really. These are all high flying rich people and all that, and they don't want to hear the answer. I don't think, and they want to keep their smartphone and their data package and have their cable TV and unscrew me. I want you to fix this without me having any problems. What is this going to look like to the man on the street? How big are the problems going to be?
Well, listen, when I say Dark Ages, don't for a minute think that I'm ever saying that commerce will stop. Commerce will always continue, but it's not going to continue in the same form that we've been used to doing it. It's going to, start thinking in terms of barter. And start thinking in terms of what you have and what you can trade to get what you're going to want going forward. Whew. And I think when you start wrapping your head around what barter is, I think you're going to start getting your head around where we're headed, because we're headed for a breakdown in our current system, where fiat money is going to be held in such ill repute by everybody around the world that very few people are going to accept it as means for exchange, and in exchange for their labor. And people are going to want something tangible if they're going to be giving up something tangible, like their labor or their treasured goods that have utility that are wanted by other people. So that's where I think we're headed, and that's why I position myself and recommend others do so, to own stuff tangible. And at the head of that list of tangibles, I put physical precious metal.
You're talking about, Mad Maxfield. Here's 3 shotgun shells. Give me a slice of bread.
If you want to say it that way, sure. I might think in terms of, here's 40 ounces of silver, and that's going to be your pay for the year.
Wow. Rob Kirby, KirbyAnalytics.com. Rob Kirby, you've proven once again why you're a favorite on this channel. One of my favorites too, incidentally. Just one of my. I have a lot of favorites. I like everybody I have on, but I have you on more than other people, and the reason why you have a lot to say. So, Rob Kirby, KirbyAnalytics.com. Thank you very much for joining us today, my friend.
My pleasure being with you, Greg.